This is your host, Stephen Sargeant, the Around the Coin podcast. We probably have what could be the episode of a century. Zama is such a cool company. They're doing FHE and they are building the next infrastructure for Web3 around privacy. And Rand Hindi is just an amazing CEO. He's a great listen. He tells us all about how institutions are using this privacy protocol in order to get access to public blockchains. And a lot of the ideas he's coming up with, he's an investor of over 100 companies, but he also has been early on a lot of different technology, including biohacking and AI and FHE. So if you want to know what FHE is, you have to listen to this episode. We really break it down on how it's going to help institutions and consumers finally get a hold of this privacy issue. And I can't wait for you to listen to this episode. Probably one of the best ones that we've had in a while. And I know you'll agree. Check it out. Rand, you're an entrepreneur, deep tech investor. Give us a little bit of your elevator pitch, and I'm going to go in. You've been on the podcast before I was the host of the podcast. For those of you that haven't listened to that podcast, it was kind of like that pre-blockchain era for Zama 3 years ago. We are going to ask you some things that you thought about then, how they've evolved over the last 3 years, especially with the advent of AI.
Thank you for having me, Stephen. And by the way, you guys were early 3 years ago. Huh? You had Zama on the pod before Zama was a well-known brand. So congrats on being an early visionary on that. I can give you a little bit of intro.
Yeah.
I've been a developer since I was a kid, built my first company as a teenager in the 90s, then did a PhD in AI when I was 21. After that, I built one of the first AI companies in Europe. That company got acquired in 2019. And since 2020, I've been building Zama with my co-founder, Pascal Payet, who's one of the inventors of this technology called Fully Homomorphic Encryption, FHE. I've also been in crypto since 2013, so I've seen 4 cycles so far. And I'm an investor in about 100 companies, mostly early stage deep tech, longevity type of deals.
Do you find it hard, before we even jump into your background, when you say you're invested in 100 companies, we have a lot of serial entrepreneurs, are now co-founders. Do you find it tough to balance it? You listen to a lot of these business guru podcasts, and it seems very easy. The founders are able to balance, also investing. How do you balance focusing on, building Zama up to a unicorn, but also trying to invest in the next unicorn?
I think my strategy when I invest is I only invest in things I already know about. I don't need you to convince me about your market or what you're doing because I've already made my mind about what I want to be investing in. So the question is, can I find incredible founders to invest in those sectors I'm currently looking at? So I'm kind of removing a big part of the job of like an investor, which is to figure out whether this is a good opportunity. If you're going to come to me and you're going to pitch me longevity stuff, you don't have to convince me about it. You just have to convince me that you're the right person to solve that specific problem. So it's more of a human thing in the end, to be honest, which is, it's not data. It's you and I talking together and I'm like, he gets it. He's going to be building something meaningful. I want to be part of it.
When you're having discussions, especially, we went through a phase where it was so hard to get on a cap table. I would love to know, what is the company that you say, yeah, I invested in this one that kind of gets people's eyes to go up? And is there a company that you're like, I missed out on it? I might have gotten in a later round, but I really believed, to your point, I really believed in the tech and knew the tech, but I didn't go all in that investment.
I think, some of my most contrarian investments have been in biotech longevity. I've been like a biohacker for 15 years, right? So for me, it's obvious that healthcare and medicine is changing radically. For example, I invested in a company doing psychedelics for mental health back in 2020. Okay. Columbia professors, super good guys, came to me like, hey, look, we're going to build a psychedelics biotech, first round, 10 million investment. At the time, everybody was like, what do you mean biotech? Like mushrooms, LSD? How is that going to cure mental health? I'm like, well, if you know, right? And guess what? That company got acquired a few months ago for $1.2 billion, right? So that's the kind of stuff I'm looking at. I'm not looking to be on every deal, but I'm looking to invest in things that I have personal conviction is going to be super important in the future.
It's funny that you mentioned that Mike Townsend, who you spoke to in the podcast, that's what his wife's into. And that's where kind of Mike has moved into now as well. So it's so interesting reading your bio. I sent Mike a message like, hey, he's investing in the stuff that you're actually working on, which is kind of cool.
Your friend with Mike Tyson, man?
Mike Townsend, the host of the podcast.
I was like, what's the relationship here? Like, I heard Mike Tyson because Mike Tyson actually did mushrooms, and he's been going out and telling everyone that like psychedelics save his life. So it was actually relevant if you were talking about Mike Tyson as well.
I think if I had more connections with Mike Tyson, I would, similar to the doctor in front of your name, I would be starting off most conversations like that. What's interesting is one of your first companies was Snips. It was acquired by Sonos, but like that was very early to be focused on privacy back in 2013. What was this huge priority for you? And like, especially from a career of entrepreneur that got you looking into privacy and like feeling so strongly that you're building companies around it over a decade ago?
It actually started when I was a teenager. So when I was 14, I created one of the first social networks at the time with a friend in Europe. It got quite popular with teenagers in France. And at some point I was looking at it, I was like, it's kind of weird. It feels weird that I can see everybody's data just because I'm the one who built the website. And mind you, this was like in 1999 now. So it was way before anybody was even asking questions about privacy and about these things. So from that day, it just felt wrong that just because you're providing a service, you should see everybody's data. Then after that, I did my PhD in AI applied to biology and specifically looking at DNA. And when you look at DNA, like it's one of the things everybody agrees is private. By the way, I would argue it's not that private, but anyways, people do believe it's private. So for me, it became indissociable. Like I realized that if we were going to be moving in a world where things were going to get more and more digital, where AI is going to be in more and more places, we're going to have to give more and more data to those service providers. And therefore, privacy is only going to become more and more of a problem. So it's not that I decided to be a privacy entrepreneur. It's just that for me, anything I would build had to have some level of privacy built into it.
I feel that's been exacerbated over COVID, right? I'm showing a 16-year-old teenager my medical record just so my son can go into an arena and play soccer. So I think, it sounds so strange to say it now, but when you look back, I'm curious. You mentioned that you've been in 4 cycles. When you're on the podcast last time, you talked about being in 3 cycles. I feel like we're in the middle of a cycle right now with stable coins and the convergence of blockchain and AI. Any thoughts about, is this like, what kind of cycle? Is this the 4th cycle that you're talking about? And what do you make of it?
It is, I mean, this cycle feels very different though. So in 2013, there was nobody in blockchain. Ethereum was not even around, right? So it was basically Bitcoin. So all the people that you talk to were either traders that got excited about digital money. So in fact, I learned about Bitcoin the first time in 2010 from my dad, who was a currency trader, right? So he sent it to me. It's funny because he sent it to me at the time Bitcoin was seen as a meme coin by traders doing like, FX trading, right? It wasn't called a meme coin, but they're like, oh, look at this funny internet money kind of thing. Like, let's play around with it a little bit kind of thing. But it was only in 2013 when one of my friends told me really what Bitcoin was about. I was like, oh my God, this is not about, magic internet money. This is about the future of finance, effectively. And from the day I was hooked. So first cycle in 2013, you had to be a believer to even hold Bitcoin because it was hard, man, to just hold Bitcoin. Like it was really difficult to even come across like, how do you buy Bitcoin, Then 2016, 2017, 2018, the whole ICO boom. This is the first time entrepreneurs came on board, Ethereum launching, everybody building on top of it, but nobody had any clue what they were doing, quite frankly. So it was like, all over the place. The first time there was a little bit of like professionalism was in 2021 with DeFi, So DeFi is the first time that like real serious builders came into the scene. But this cycle is yet different because this cycle, my feeling is the level of sophistication of projects and people and analysts and podcast hosts is comparable to TradFi, comparable to Silicon Valley startups. Like blockchain is no longer an outsider thing. Like it's mainstream technology, just like AI is right now. And that is very, 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 very different. This is very new. I'm very bullish because I think that blockchain is going to have a much better future now. But I also do think the 1000x betting on a random coin are going to be very difficult to come by now.
Especially with the progression to, the betting sites, and now everyone getting into prediction markets. It's like you turn on any football game, any soccer game, and the only thing you're seeing is fantasy football, betting on, the field goal, which is something I used to be into, but it was never to the point. The fact that Yahoo created a fantasy football site for you to create your team was a huge deal. And now it's over every single commercial that you can bet literally on every play, every coin toss, the Gatorade. It's going to get into that point. I'm curious though, because, you talked about the institutions, the building. I remember during the bear market, everyone talked about the builders are going to keep building. And now we're seeing acquisitions and mergers. And what do you think? Were people actually building during that last bear market? And is that the reason that fueled a lot of this bear market?
Oh, 100%.
Including Zama, right?
Yeah, 100%. Like it's always the same thing, right? There is a cycle where people get excited, and there is like all kinds of activity. There's always going to be a bear market, right? Like whatever goes up goes down at some point, and then it goes back up if it's good. That's the universal truth of every market in the world. Apple lost 40% of the stock at some point. That's a pretty bad bear market. Meta, I think, went down 70%, right? So crypto is really not different in that sense. What happens though is during the bear markets, the good founders who raised money during the previous bull markets are building their products and they're launching it. And what triggers the new bull market are all of those projects that were funded in the previous cycle that needed time to build during the bear market. So that's why you see this kind of like 4-year cycle repeating over and over, is because there's 2 years of bull market, then there's 2 years of building before there's even anything to get excited about again.
And I'm curious, as we get into Zama, I remember being very early in crypto around 2016, early for me, not for you. But I remember financial institutions wanted to touch crypto, but they wanted everything to be permissioned. I remember R3 was like all these organizations were getting together, but they never wanted to be on the public blockchain. You've described this as Zama at being like the blockchain confidential, the dilemma. Like they want to do trades, but they don't want everyone to see those trades. And you're talking about large institutions moving millions, if not trillions of dollars, which could have market reactions if it's public in real time. Talk to me about this dilemma and how you were able to build Zama to solve this one core problem for financial institutions getting into digital assets.
If you're a financial institution or a bank, or if you're anyone doing serious finance, you know that confidentiality is a key part of being successful. If you're going to be holding assets of your customers in stablecoins, you can't have everybody see all of their bank accounts, right? If you're a professional asset manager and all of your trades are public, you're not going to have much of an alpha, and people are not going to pay you a carried interest to manage money for them. So confidentiality is indistinguishable from finance in the first place. What Zama does is that we add a layer of confidentiality on top of existing public blockchains like Ethereum or Solana, so that people can take any token, shield those tokens, and now confidentially transfer them, swap them, stake them, lend them, and do whatever they want to do on chain. So you can take $1 billion of USDT, you can convert that into $1 billion of confidential USDT, and everything you do from that point, nobody has an idea. You could be buying, you could be selling, completely oblivious to the rest of the world.
And I guess that approach differs from like a permission blockchain where only certain participants.
Yeah.
So you can't get access to all of these amazing tokens and blockchains and protocols. You're limited to like where 60 other large organizations are. This opens it up to everybody, but that confidentiality is still there.
It's on Ethereum. It's on Solana. You got money on Ethereum, you can shield your money on Ethereum. You're not bridging it outside. You're not like, using a different protocol. You're on Ethereum. And that, I think, is a fundamental shift. We think of Zama like as HTTPS for blockchain, adding a layer of encryption on top of existing infrastructure and services that people are already using today.
And why FHE? That, there's so much encryption. There's so many things. There's the way Bitcoin does encryption. Why did you choose FHE? Is that something that you found very early on? Was something that people weren't expanding or companies weren't building on? So you thought there was a market for you to explore?
I discovered FHE back in 2015. When I was researching confidentiality for AI at the time. And that's when I met my Zama co-founder, Pascal Payet, who's one of the inventors of homomorphic encryption. It's like if I told you I created a new blockchain company with Vitalik, like he's that kind of guy in FHE. Okay. That level of like famous guy. So Pascal came to me and said, I think we can make FHE work. That's why we started Zama. So why FHE? What is FHE? FHE is a way for you to compute unencrypted data without decrypting it. So for example, your balance on chain would be encrypted. The transfer amount you want to make would be encrypted. It would be a smart contract making the transfer, but nobody would ever have to decrypt the data in the first place. Okay, so it's like end-to-end encryption for smart contracts, effectively. There are other technologies that exist to offer privacy on blockchain. You have, what's called TEEs, MPC, ZK. FHE is the only one that is secure, verifiable, and composable. It's secure even against quantum computers. So the data you're encrypting with Zama today cannot be broken by future quantum computers. T's, on the other hand, have been completely broken, so much so that Intel came out and said, don't use it for blockchain. This was never designed to be secure in that environment. Gone. MPC, great technology for key management. We use it for that. Not very good for verifiability. It's very hard to verify an MPC computation. FHE, anybody can recompute it and verify the state. And ZK, very popular, very good for scalability, but it doesn't give you composability. If you're taking shielded Zcash tokens, you can transfer them privately, but you cannot stake them, lend them, or do anything else with it. FHE tokens are fully composable, just like regular tokens. You can take USDC, convert it to confidential USDC, and you can still stake it, transfer it, swap it, and do anything else you want.
You mentioned so many other protocols and so many encryption. What would they say about Zama? Like, hey, yeah, it's perfect. They can do all those things that we can't. But there's one thing that might, like, maybe they're slower. Or they don't do it. Is there something that would be the rebuttal to what you're saying about, some of the other protocols that they work, but you do something a little differently? What would the rebuttal from them be?
It kind of changed over time. Initially it was, FHE can barely do anything. We solved that. Now we can do everything. They're like, okay, can do everything. Then it's too difficult to use. We've made it easy by integrating it in Solidity, for example, for smart contract developers. So now you don't have to learn anything about cryptography. Now they have to find something else. So now they're saying FHE is too slow. Well, we just launched Zama on Ethereum, okay, mainnet. We can already do more transaction than Ethereum can do. So we're faster than Ethereum. Ethereum has $300 billion of assets on it. So we're fast enough for 300 billion of addressable TVL, which I think is a good starting point. And we're going to be at 1,000 TPS by the end of 2026, enough for any L2 that you're looking at. Not just that, we've been investing in building a custom chip and ASIC to accelerate FHE, which can give us up to 100,000 TPS, which is enough to power global payments on chain with FHE. So, like, to those that believe FHE is too slow, they're actually proven wrong at the moment. FHE is getting better by a factor of 10x year on year at the moment. So it's like if you're betting against LLMs, 5 years ago, right? They're too big, they're too expensive,
Yeah.
It's never gonna work. We should use like those old AI stuff and everything. You were right 5 years ago. Oh man, you're very wrong today. And this is the same thing with cryptography. Like, people have a tendency to underestimate how quickly an exponential improvement improves.
And do you find you're seeing so many different companies and investing that you're getting a lot more context when it comes to making decisions like that, because you're seeing a lot of the surrounding technology and then maybe how fast it's evolved?
Oh, for sure. Both ways, right? So as a founder, it gives me a lot of visibility on what matters to figure out what to invest in. And as an investor, I see a lot of what the other people are doing. I'm like, okay, that's interesting. I should think about that in my own company. So the two are actually are reinforcing each other.
This makes a lot of sense based on the examples we've both given for like traditional financial institutions getting into digital assets, Web3, and even DeFi. What are some of the other common users of Zama? What are some of the other things that this new entrants into the space that weren't present maybe in the last cycle that you see coming in today, especially around things like stablecoins?
There are a few use cases that I'm personally looking into myself. And of course, there are use cases we didn't think about that people are going to come up with. So payments is a big use case. For example, there is a company that's building on the Zama protocol called Raycash. Fantastic company. One of the founder was the former COO of Checkout, which is a $40 billion payments company, big competitor to Stripe. Raycash is an on-chain neobank, but they're using confidential stablecoins to keep your money private on-chain. So, there is like a whole bunch of companies building like on-chain Revolut type competitors. But if your money is in stablecoins in public and everybody sees how much you're spending and making, nobody's going to use it. Raycash is solving that problem using Zama to keep your stablecoins balances confidential. Everything else is working. You can pay with it. You have an IBAN, you have a credit card, you have like the whole suite of financial applications, but private. So that's one. A second one is what I call on-chain capital formation and distribution. Any crypto company will have to raise money from private investors, do a public sale, distribute tokens to their team and to their investors. Okay. Nobody wants those distributions or private sales to be completely public. Like investors don't want their allocation to be public. They end up creating 20 different wallets to hide their allocation. Team member get pissed at each other because, you got more money than I did. All of that goes away, man. You just encrypt the tokens before you send them, right? And now you have confidential token vesting. You have confidential token sales. Like nobody knows how much Multicoin is getting in Zama tokens because nobody can see their balance, right? So you no longer need 20 wallets to hide that. You no longer need to worry about Arkham Intelligence tagging you. You no longer have to worry about, social media being like, oh my God, Multicoin sold Zama tokens. It's going to zero. All that goes away, man. It goes away, right? That's a huge, huge use case. We're talking trillions of crypto being created that can benefit from that. And finally, the third one is real world asset tokenization. Okay. You want to tokenize gold, you want to tokenize real estate, you want to tokenize anything. You need confidentiality. Again, if you're an asset manager and you're going to manage a portfolio of tokenized assets, you don't want this to be public. I don't even think you're allowed to make it public. Like there are rules to what you can do. We're solving that problem too.
The reason why I laughed when you mentioned Arkham is because a former blockchain investigator myself, we used all the tools, chain analysis. So when you mentioned that, you don't want people being able to trace everything you're doing. And I'm even thinking governments are getting into digital assets and buying digital assets and distributing them. You do not want people to be able in real time. You want to know that the distributions were made, but you may not, want that information public about the amounts or to the exact locations it's going.
That for me was the big, my big thesis for Zama, right, is what people want with blockchain is not public visibility and transparency. What they want is public verifiability. Okay. And FHE gives you that because you can verify the distribution was made correctly, but you cannot see the individual data points and amounts that people got. Right? You get a public verifiability without the public disclosure of the data.
And because it's verifiable, auditable, and compliant, how does that work for traditional financial institutions that have to meet regulatory compliance requirements? Is that more helpful? The government's going to be like, hey, where did you receive the funds from? How did they, present these findings and reportings to government agencies, especially around things like tax and balance sheets, especially for some of these larger companies?
I actually think compliance is one of the strong suits of FHE and Zama in this case. So up until now, blockchain privacy with ZK was all or nothing. Okay. Either the whole thing is anonymous and nobody knows anything, or everybody sees everything, right? There was no kind of middle ground. FHE allows you to program compliance into your contracts directly. So you can have selective disclosure and programmable compliance. What does that look like in practice? As a token issuer, let's say, for example, I'm Circle. and I want people to have confidential USDC payments. I can give myself, Circle, the ability to decrypt the transaction of USDC users, so I can comply off-chain with AML tools and everything, just like a bank does. When you have a bank account, you see your bank account, your bank sees your bank account, but your neighbor doesn't. And this is what we're enabling here with programmable compliance on blockchain. We're telling people, hey, look, maybe this isn't about end-to-end encryption. Maybe this is about hiding the data from random people on the internet, but maybe it's okay for Circle, the token issuer, to see the data.
And I believe random people on the internet are getting really good at investigating the blockchain, right? I feel like that's, solely they're responsible for FTX and a lot of discoveries in the Web3 industry.
To be fair, I think that goes both ways, right? Like, one side is good because, you can surface scams. The other problem is it creates way too much overreacting on things which are just mundane, okay? A big treasury company or like a big investor is just literally rebalancing their portfolio. Okay, maybe they're sending to Binance because they're rotating their wallets; they're not even selling. People are just going to freak out because of that. So I'm actually a believer that the volatility we see in crypto is in part also due to the fact that people just freak out where they really shouldn't be freaking out because there's no reason to freak out. And removing this, public visibility by default removes a lot of that as well. I think we're going to get better market with privacy. We're going to get better market, less volatile, more like traditional stocks with privacy.
If I remember, I didn't dive deep into it, but during the FTX, I remember Crypto.com sent a large sum to another address, and there was this huge overreaction to your point about Crypto.com is next. They're the next ones to go under. And it's like, to your point, a lot of these companies are just balancing their books. They're settling up at a certain time. With so many financial institutions being built on top of, blockchains now, like financial applications, what were some of the risks that you're seeing now that your privacy, to your point about like, hey, people are able to see everything, they're overreacting, they're able to investigate. What were some of the risks? Like we've seen in-person kidnappings, we've seen a lot of, wallet drainers and social engineering attacks because of the, public nature of these blockchains. How much is Zama contributing to reducing these financial crime risks?
No, that goes away. I'm from France. Okay. In France, we have, I think, the highest rate of violent crypto-related crimes in the world. Okay, and for a while, we couldn't figure out why this was happening. Why France specifically? Well, it turns out for two reasons. First, because a lot of the data was leaked in France, so there's like databases. Two, because whenever you own a company, there is a public registry with your home address, on it, so people know where you live. And three, we just found out this week. There was like an IRS, like the equivalent of an IRS agent in France working for the government that was leaking the private detail of large crypto holders to criminals. Okay. So like someone in the government that you're reporting your crypto holdings to because the law forces you was giving this information to criminals. So man, no wonder this was happening. What is your only way against that? Encrypt your wallets. Encrypt your wallets. If you keep your wallets encrypted, nobody knows how much you own. They can speculate, but they don't know. They don't know for sure. And that makes a huge difference because nobody's going to take the risk of kidnapping someone unless they know for sure that there is enough money for them to gain out of it. Like, imagine you kidnap someone, cut their finger off. You're risking jail for life, Are you going to do that for like 50K? You're not, right? You want to make sure there's a little bit more money than that. FHE removes that visibility. It removes the risk.
I don't know the exact stats, but we've seen a lot more kidnappings. The one you mentioned, I believe, was in Paris. We've seen in New York kidnappings and requests for money. It's happening. OnlyFans influencers. It's the threat is very real. One thing I did see on your website is that you have an opening for a compliance officer to lead the development and execution of compliance frameworks for some of these confidential tokens. Can you explain maybe some of your regulatory requirements, if any, and which jurisdictions are you able to utilize your protocol to its full potential?
This is very new, and we feel that Zama's role is also to spearhead thinking around how do we build confidentiality with, compliance for public blockchains. So we want to find someone who can come on board, not just help us be compliant, but actually more work on building a compliance framework that every token issuer will be able to adopt when they're using Zama. We want to give people like a simple get started with compliant privacy on chain kind of framework, because everybody's struggling to answer those questions. So if you know anyone, or if you are someone listening that want to work on shaping the future of blockchain privacy and compliance, please do get in touch, because we're looking for someone.
And that's so interesting because you don't really have those requirements now, but you're kind of, building the framework that eventually is going to touch on. Let's face it, everyone said the same thing about Bitcoin. Like, it's the Wild West. They'll never be regulated. And then look at where we are now. So, it's great to get a head start, and it's amazing that you're spearheading it. I'm excited to see who takes on this approach, because I think, to your point, a lot more DApp developers are going to, especially with what's happening with a lot of developers, when it comes to US authorities and others, want to make sure they're on the right side of the law, or at least have a framework as a blueprint.
Exactly. And I want to be very clear about something. We are a company, and we're building a solution for legitimate financial use cases. Compliance is part of how finance works. Okay? I don't make the law. The law says you have to have compliance. I'm trying to find a way to make sure that we have the best of both worlds: privacy on chain and compliance for finance. I don't care about North Korean hackers. They're not my customers. Right? So I'm not building for them, to be clear. I'm building for JP Morgan, for Goldman Sachs. I'm building for these guys. They're the ones that care about.
Yeah, usually people building to launder illicit, sanctions evasion funds from Lazarus Group aren't looking for compliance officers.
No.
So what's funny and interesting, though, is that much of the hype around today's privacy solutions is that they can bridge TradFi and DeFi, but it doesn't seem like we're overall accomplishing that. How are you able to do that? How are you able to bridge, the gap of the biggest concerns or opportunities that TradFi companies get excited about when they're dabbling in the DeFi? Like, how were you able to bridge some of that gap?
I mean, I'm not trying to convince people to get into DeFi or to use blockchain for finance. I think people are already sold on the idea. I think at that point now, especially what's been happening in the US, we can safely assume that finance wants to move on chain. The question is, are they going to use public blockchains like Ethereum and Solana, or are they going to build a custom private chain and maybe using something like Canton for heavy interoperability? Okay. I believe that people should be using public blockchains, because public blockchains give you composability. They give you a hub that you can build on top. They give you access to all of the retail participants. It's very hard to rebuild that on a private chain. So if you believe that public blockchains like Ethereum and Solana are going to win finance, then confidentiality becomes a key enabler for that to happen. Privacy is like the final boss of blockchain adoption, effectively. We've solved programmability with smart contracts. We've solved scalability with rollups in Solana. Now we solved privacy with Zama.
Have we solved, user experience? Have we solved UX, in your opinion? Or, is that depending on where you are, the UX is good? Because it still feels, a lot of people that come on here still says, like, blockchain still feels clunky. Like buying an NFT still feels clunky. Do you think that will be the next step after privacy? Is like, okay, now let's make this look like you're just logging into Telegram and sending a message?
Yeah, you're still talking about money, right? So like, it cannot be, just open an app, right? Like, when you have a banking app, there is at least some form of authentication, a passkey, whatever, something like that. I think you're always going to have a little bit of like this financial feel to using blockchain, because let's be honest, blockchain is primarily a great tool for financial transactions. Okay. So it shouldn't be harder to use than like a neobank app like Revolut. And I think you can see wallets are going down that direction, actually. Wallets are becoming more and more like neobanks and less like cryptographic signing devices. So I think the UX is going to be a mix of people learning to use wallets and a mix of wallets becoming more consumer, fintech type products.
And we've had about 6 or 7 different wallet providers on the podcast. And then recently, just because there's so many, to your point, there's so many interesting developments in the UX and the different ways they're approaching wallet infrastructure. I'm curious because Zama's live today. You're powering applications like confidential DeFi auctions, and to your point, payments. Can you share what you've learned from like launching infrastructure and all of these different functions, financial functions and applications in the ecosystem?
It's hard. You know, I, I, I sold a company before, my previous company. I thought that was hard, selling a company, because that was like really stressful, man. Like, going through like an exit is tough. I think this is probably 10 to 20 times easier than launching a blockchain protocol and token, right? Launching a protocol is hard because you have to think about so many things. First of all, blockchain infra is extremely immature if you compare it to like cloud Web 2 infra. It just doesn't work. Like nothing works in blockchain infra. It's insane. 95% of the time we spend at Zama has nothing to do with FHE. It has to do with just making this stuff work in a blockchain environment. That's insane. Like, I can't believe people didn't figure this out yet. Maybe there's a company there. So that's the first big hurdle, right? Like the tools are bad. The second one is you're facing like extremely heterogeneous regulatory environments, none of which have a clear, definitive stance on crypto. So like you're like, oh, I have Mika in Europe, and now we have Clarity in the US, and then there is like this new UK stuff they're pulling up, and then China changes their mind every day, and Korea is like a whole other ball game, and like so you have to juggle so many different things, and that's really really difficult because like nobody likes uncertainty, and then of course there is adoption. This is not 2016 anymore. You cannot just launch a chain and people use it because there's nothing else. There are millions of opportunities for people. And so you need to build distribution. You need to build, early adopter, you need to build application just like you do in Web 2. If you buy an iPhone, there are apps that Apple built on it, because if you buy an iPhone and there is nothing for you to do with it, you're not going to be very happy about the experience. That's the same with blockchain today. When you launch a protocol, there needs to be something you can do on the protocol on day one, right? So you have to build a full stack, decentralized infrastructure with an application layer, with a financial, logic for your token, all of which is wrapped into, legal uncertainty. Plus, we're doing privacy, so as an layer to that. It's tough, but it's important. It has to be made. It has to be done.
And if you weren't challenged enough by launching a protocol, you are coming out with the Zama token as well, which is coming soon. Can you tell us a little bit about that? I think you have an interesting approach to the auction that you're doing. What's this auction style like? I think I remember a Dutch auction when I was buying, my first Gary V NFT V friends.
Uh-huh.
What's this auction like? How does it differ from a traditional sale? And is this purely a utility token to power the Zama ecosystem, or are you utilizing this token for other things?
So the Zama token is a utility token. You use it for two things. One, every time you're encrypting or decrypting data, for example, when you're encrypting the amount you want to transfer or decrypting your balance, you have to pay a small fee to the protocol in Zama tokens. The protocol automatically burns those fees. So 100% of the fees are burnt by the protocol. On the other side, you're using the Zama token to stake as an operator of the protocol to earn rewards. And we're minting the rewards for those stakers. So it's like a mint and burn type of utility model. Similar to Canton, similar to Solana, similar to we're not reinventing the wheel on that front. Now the auction, we're going to be selling 10% of the supply of Zama token through a sealed bid Dutch auction on Ethereum using Zama to hide the bids of people participating. So this isn't a pre-sale. This is a sale of a token for an existing product in mainnet that's already running today. So the way that the sale is going to work, there is a 3-day bidding period. So you can register today on auction.zama.org/register. So during the bidding period, you need to shield USDT, and you're bidding with shielded USDT. The price that you're bidding at is public, but the quantity you're trying to buy that price is private. So people don't know if you're buying $1 or $1 million, or one token or 1 million tokens at that price. At the end of the bidding period, we fill bids from highest price to lowest price. And the lowest price at which someone gets filled is actually the clearing price that you end up paying if you bid above. So let's say, for example, I just bid to buy 1 million Zama tokens at a 2 billion FDV. And the last bid cleared at 1 billion FDV. I'm still getting my million Zama tokens plus a refund for the extra money I paid between 1 and 2 billion FDV. Right. So this type of auction is actually not new. People have been doing this for actually 2,000 years or something like that, more than that. Google did that for their IPO back in 2004. So it's a very, very common type of auction in TradFi. It's just we couldn't do it in blockchain because you need to hide the bids. Otherwise, it doesn't work, right? It is, by the way, a very cool use case for Zama itself.
Yeah. Is there anything better when you use your own technology to, to do the actual thing that you're meant to do? I've seen that. I think MeshPay did, when they raised funds, they did it through their own infrastructure. I think there's nothing cooler than using your own infrastructure. I remember when you were on the podcast last time, you weren't very sympathetic to data brokers and companies, that sell data. Has that changed over time? Because like FHE changes the economics of advertising and data a little bit, but it still allows you to do targeting, which is maybe you can explain that for people that didn't listen to the other episode. And has your mind changed over the last, 4 years of seeing the way data has, gone? I think privacy's gone a little bit better with data with some of the iOS application updates. You might differ. You might disagree.
I think the podcast was before ChatGPT, wasn't it?
It was 2022. So yeah, before it was like actively being used.
Yeah. So pre ChatGPT is a kind of a different world if you think about it. It seems crazy. It's not even 3 years. Oh my God. Anyways, so what has changed? First of all, we discovered that for FHE specifically, where we had the most product market fit was in blockchain. So that's why we decided to recenter the company around blockchain use cases and launch the Zama protocols, because we were like, look, people really need that in blockchain. In the cloud, AI, those things, people trust Google already, right? They're like, whatever, I'm fine with Google, You cannot really trust anybody with blockchain because anybody could be running a node at home, So it's a very different assumption in the first place. That's why FHE is such a good fit for blockchain and why we haven't seen as much of like strong demand from the cloud side. Now, it doesn't mean you cannot use it. You can use it for AI. We have an AI product. You can use it for confidential advertising. There's just no demand, to be fair. Blockchain, huge demand, insane demand. Like, I cannot tell you how big of a problem we're solving with Zama in the blockchain space. It's probably one of the last huge opportunities that there exists today to build something meaningful in that space.
And I'm curious because you mentioned hardware and chips, and you have the state of the FHE report that we're actually going to put in the notes, which was a really interesting read. Had some amazing visuals and timelines, but it seemed like in the timeline there was about 10, 20 years where nothing was really happening in between 2006 and 2024 when it came to chips. Obviously, now with NVIDIA and everything that's happening. What was happening during that time? As an investor, I think, investors and VCs were staying away from hardware when it came to investments. Can you kind of describe that 20-year gap in your own words?
Well, I mean, hardware is actually how Silicon Valley started, if you think about it. Initially started with radars and then semiconductors. This is what made Silicon Valley. We lost interest in hardware because at some point the internet came about, and internet was primarily about software. Okay. So like the opportunity of 1995 to 2020 was mostly around software. That has changed with AI because AI has gigantic compute requirements, and clearly a CPU is not enough, and even GPUs are struggling to keep up with the demand for AI. So you see a company like Grok who built, not the Grok from Elon Musk, like Grok, like the semiconductor company. They built a competitor to NVIDIA, and NVIDIA bought them for $20 billion. I mean, NVIDIA is the biggest company in the world, man. Like, NVIDIA was doing video game graphic cards. Like, that wasn't like a 5 trillion business at the time. AI made it pretty. So I think at some point, and it's funny because this was also obvious to to some of us, right? But at some point, people realize that, oh shit, there is actually something computing in the background. And a lot of those fancy use cases, space exploration, nuclear fusion, AI, blockchain, Bitcoin mining, CPUs are not meant for that, right? So one of my investment thesis is that we're going to see more and more application-specific hardware being built, and the cost of building this hardware will go down exponentially. So instead of like hundreds of millions to invest to build a chip, it's going to take millions. And then eventually it'll just be AI designing it for you. And then, a fab in the US or in Taiwan or wherever producing it. So we're getting into an era of like hardware, software co-development by default.
Do you feel it's like very similar to like the 3D printer? We went from, not being able to build anything. You need a toy manufacturer, you need, products, and you would need samples, to all of a sudden people are like creating businesses out of a 3D printing model, something that's created, overnight. Does that, I feel like we really sped up that, especially when it comes to consumer goods.
Yeah, I think so. I mean, maybe less consumer oriented, I would say, but like as a company, if you really want to squeeze out every, inch of performance, you're going to need to build hardware at some point. Why is Tesla so good? Because they build the hardware and the software together. Why is the iPhone so much better than other phones? Because they build the software and the hardware together. Like you'll see that every time you look at a product and you're like, oh my God, this is such a delightful experience. It just works. It's because people built the hardware and the software together. And, this is what we're doing with FHE as well. We're building the FHE, the protocol, but we're building the hardware to make it faster. And that's how you end up getting experience like, oh, wow, this is super smooth. Yeah, well, because we build the whole thing to be one thing, right? I do believe in this kind of hardware, software, vertically integrated thing as a major trend in technology.
Was that an easy sell to the rest of the Sama, like the C-suite that like, hey, we want to get into hardware now because that will release, similar to how AI was able to release some of the hardware potential?
It was part of our thesis from day one. So like, we got into FHE knowing that we would need an ASIC at some point. So if anything, we haven't really questioned that thesis. So the contrarian thinking would be, do we actually need it? We do if we want 100,000 TPS.
I'm actually wanting to talk to you about privacy in general. It feels like, the average consumer will give up the majority of their privacy to save 10% at Bed Bath & Beyond. What are your thoughts about where we are from a privacy? Is this more an institutional adoption thing? And where we are is like from a privacy side when it comes to the average consumer around the world?
That's a very good point. Clearly today, the biggest demand for privacy comes from institutions and large asset managers. So the more crypto someone holds, the more they care about privacy at the moment. And understandably, because they're the ones being targeted by everyone, effectively. Consumers, I don't think they should care about privacy. And the way that we solve the problem is not that they don't have privacy, is that we make privacy so cheap and seamlessly integrated that they don't even realize it's there. When you connect to a website, there is a small lock in your browser that says, this connection to the website is encrypted with HTTPS. You don't think about it. It's there. It's just a small lock. Okay, good. It's just a tiny visual clue in your browser, but you don't think about it. We want to do the same for blockchain. We want Zama to be so deeply integrated into blockchain infrastructure as the core confidentiality layer that people use it without thinking. The users don't even know it exists. Like if Zama does its job right, you don't know Zama exists because we're going to be woven into the fabric of blockchain.
And I'm curious, maybe from your perspective, who are some of those people, building on top of Zama, and how do you attract those builders? We've interviewed a lot of protocol CEOs on this podcast, and it seems that there's a lot of L1, L2 new protocols popping up every single day in DeFi. And, they're giving away token grants and everyone's going there. Then they're moving to another, protocol. How do you attract and, maintain and retain top talent building on top of Zama?
Our strategy is twofold. On one side, we actually build apps internally we hire founders to come and build those apps at Zama, and then we spin them out eventually. So, kind of like a startup studio, entrepreneur in residence type of strategy. It's been working great so far. We just spinned out our first company, Raycash, that I mentioned earlier, doing this confidential stablecoin yield bank on chain. So that's one. The second one is, as an investor, the good thing is I'm used to finding good founders and, knowing who to invest in. And so I kind of use the same approach to who we want to be helping, supporting, funding in the community. Really trying to work with founders who want to build great things and offering them a distribution channel, offering them introduction to investors. I might even invest myself. Look, at the end of the day, an ecosystem is about people. This is primarily the thing that you want to be building. You want to build a great group of people who are excited about using the technology to build something new, and you want to give them the tools to be successful.
We have so many founders, especially across payment, tech, and crypto, that listen to this podcast. Any advice from, the founders that you have invested, the founders that you've hired to work within the Zama ecosystem, any characteristics that you're seeing, especially now in the advent of AI, that you're seeing that, to your, subjective opinion, makes them a successful founder?
I think, there is what I like to call founder market fit. Are you the right person to solve that problem? And what you'll find is founder market fit means not just that you're passionate about the problem, but also that you have understanding and knowledge that other people don't. Like, something most people don't know that is obvious to you, but not someone else. And this is what I'm looking for. Like, I'm looking to work with people where I'm talking to them. I'm like, oh, wow, I just learned something. I had no idea. Like, this is actually how it works, So I think, founder market fit is the one thing that matters the most in the success of a company. And then, of course, you have to build something useful, and then you have to be good at marketing, and you have to be good at distribution. But all of these things, you can hire people to help you do it. I think, what you cannot hire someone to do is be the founder with the vision, with the understanding, with the strategy that's going to go in and kind of like, bulldozer its way through until it kind of works.
As we build, in 2026, this is the first month that this episode will be published in January. What are you excited about in 2026 for Zama, for the industry as a whole, maybe for FHE? What's exciting you the most?
Well, we're launching our token. I mean, technically the token exists. It's been already launched, but we're, doing the auction. That's the first thing. My main focus for 2026 is going to be integrations. So having Zama and confidential tokens integrated into every exchange wallet, every on and off ramp, every stablecoin, every DeFi protocol, so that nobody has to ever not have confidentiality on chain. So my number one focus is integration in 2026. And then, post 2026, we're going to think about, okay, what else can we do with this protocol? What else is there out there that we can benefit with this technology? But for now, look, this is a turning point. You know what Zama means? Zama is the name of the city where the Romans defeated the Carthaginians. And the defeat was so big that Carthage never recovered from it. And this is the Zama moment for privacy. What we're bringing here to the table is so powerful that we will never get back to a world where things are not private by design.
I'm curious, as we go into 2026 and here, you sound like you've, when I hear the things, when I'm reading your background, you're so early on so many different things, like AI, like before AI was AI, you're, getting introduced to Bitcoin, like the month it comes out. Like, what are some of the thoughts that you have that shaped or any ideas that shaped your thinking? Books, podcasts, is there anything that really shaped your thinking from now all the way to then?
It is true. If I look at my track record as a founder and investor, I've been early in a lot of things, actually. I've been early in AI. I've been early in, biohacking, longevity. I've been early in privacy, FHE. I've been early in blockchain. I think it's just that I'm interested in those things. Like, I'm curious. I like talking to people and kind of listening to what crazy stuff these guys are. I'm very rarely the first mover, but I'm very often in the first kind of like bucket of people who get interested in something. But every single time I got interested in it because I met someone who told me something that got me interested in wanting to dig further, right? So, I don't read that many books, but I do talk to a lot of people. And I want to continue doing that. I think, the true source of inspiration of what's really interesting to look at in the world, they come from human conversation. One-on-one conversations, small dinners, coffees, random encounters. People tell you something, you're like, wow, that's fascinating. And then you go and dig deeper and you're like, oh my God, this is not just fascinating, this is the future.
I think that context matters. And I'm assuming you have so much context just from talking to so many and listening to so many different people that you're able to put a lot of the puzzle pieces together before anybody else because you just have more pieces. So your puzzle looks a lot bigger. It looks a lot more complete when it's done. Where can people find you? Because this has been one of the most fascinating episodes that we've had on the podcast. Just your thought process, what Zama's already created and what's happening and going forward. What's the places where you actually engage with people? I know you're not reading a lot, so I'm not sure if you're reading your comments. What are some of the things where people can find you?
I do read every message I get, and I try to reply to everyone if I can. So you can find me on X, Rand Hindi, very simple. And Zama, just at Zama on X. That's probably the best way to get in touch with me.
I love it. I know a lot of founders, their goal is to become, the founder of a unicorn company. I know Zama has raised an valuation north of $1 billion from some of the leading investors. That's probably not a new situation for you, who's also been an investor in the companies that went unicorn. But what does that mean for the team and the morale, being able to raise and knowing that there's so many companies and VCs that believe in the mission? How is that when it comes to morale for the team?
First of all, everybody's happy, of course. I think what it changed the most is people started taking us much more seriously. Customers that were not very proactive all of a sudden became super interested, right? Like there's a lot of momentum that came with, basically raising such a large amount of funding and that valuation from tier one investors. That's important as well. Terra, multi-coin, blockchain. From my perspective, it just raises the bar for what success means. Because, $1 billion is great, but you have to actually own it. you have to, at some point, you got to build something that's actually worth $1 billion. And what I'm hoping is not just to build something that's worth $1 billion. I think if we are successful with what Zama is doing, if things are going the way they seem to be going, I mean, how big can we be if we take some fees on every financial transaction in the future? If 95% of blockchain transactions are encrypted using Zama, how big of an opportunity that is? So can Zama be $100 billion company? Yeah, I think so. I think if we're successful, there is a path to getting there. Are we going to be able to get there? That's going to be very, very, very difficult. It's going to take a lot of work, but the opportunity exists. It's possible, at least. There is a path.
And the benefit to the community and the industry as a whole is huge, right? And nobody, I think the real reason people don't care that much about privacy is there's never really been a nice, convenient solution that we don't have to exert extra effort just to be more private versus privacy almost by default, but still functionality, which has always been the biggest offset with privacy, in my opinion.
Clearly, what we're doing is actually useful. This is not another L1 that's a little bit faster. This is actually useful. And you wouldn't believe how many people I talk to that actually tell me, oh, wow, okay, yeah, I can see why people need that. Right? I'm like, yeah, well, I'm building something useful. I'm not trying to build something nobody wants. I'm trying to build like a car, not a faster horse. You see what I mean, right? But deep down, this is my own personal objective is I really want to solve privacy once and for all. I've been at this for over a decade. This is it, man. This is the Zama moment. This is the turning point for privacy where we go from, not really there, not really convenient, too slow, not there, to just done. WhatsApp went from no encryption to encrypting everything by default. Now every messaging app in the world is encrypted. Zama is going to do the same for blockchain. Privacy will be by design. Nobody will have to think about it ever again.
to your point about the internet, like when we're logging on, we just log on and go. We're not thinking like, is this website secure? When am I going to, do I have to type in a magical number and it's going to send me like, you just don't see it. It works. And that's all you need to know.
Exactly. That's our job. Our job is to do that. Zama's job is to take care of that for people, for you, so that you don't have to worry about it.
Rand, I love this. This is such an amazing conversation. Thank you for joining us again for Around the Coin. And we're definitely going to keep in touch because I'm really interested in the hardware aspect and where you go with that.
Thank you for having me. This was great.